Okay. 5.0 calculation of assessable income from business. As we discussed earlier, there are four main sources of income. The first source is income from employment, simply called employment income. Second source of income is business income. For the purpose of making profit, people are doing some sort of business. So that's called business income. Third one is investment income. People put their money for the purpose of making profit in long term. So that's called investment income. The fourth source of income is other income. Uh, we have already discussed about employment income, and also we have done a calculation. Second part we'll move to the business income today. A person's income from a business for a year of assessment. For a year of assessment. For a year of assessment is the person's gain and profit from conducting the business for the year, and it is liable to income tax. If any person who is doing business, they are liable to pay income tax on their profits, person's gain and profits, right? On person's gains and profits. Therefore, it is necessary to understand what is included in the business. Let us discuss about the definition of a business. The business is defined in the interpretation section 195 of Inland Revenue Act. Right? There are many sections. The section 195 is interpret, define. What do you mean by business? So business, right? The definition of business. Business includes a trade, right? A trade, profession, vocation, or isolated arrangement with a business character. However, short the duration of the arrangement, and a past, present, or prospective business. But it excludes the employment income, right? We will discuss in detail what do you mean by trade, what do you mean by profession and vocation. Trade simply just you buy and sell item for the purpose of making profit. So you can buy a product X for 10 rupees and you sell it for 15 rupees. You will make 5 rupees as profit. And for the period of time, you have sold 10,000 items. Then your income is 5 into 10,000, 50,000. So it is a repetitive activity, trade. You just buy and sell, or you just manufacture. You just produce something. You produce bricks, or you produce plastic items, right, by using some sort of materials, and you sell it for making profit. It's coming under a trade, right? Profession means, say, in our society there are people, doctors, engineers, lawyers, accountants, auditors, consultants. So there are people, right? This kind of job is a separate one. Then vocation say called carpenter, welder, plumber, right, and boss and sanitary workers. So these people are the coming as a group under vocation. So can you differentiate what do you mean by profession or vocation? Right, profession, right, very repetitive job to get to do something. You to practice as a job, as a profession. You have to take a license, or you have to have a certificate to do that business, right? To practice as a chartered accountant, you have to have a member of Institute of Chartered Accountant. To work as an engineer, you have to have a license from Institute of Engineering of Sri Lanka. To practice as a doctor, you have to have a license from Sri Lanka Medical Association, right? To work as a plumber, you don't want to take any license. To work, to practice as a carpenter, you don't want to take, right? It's coming under vocation. And no isolated arrangement, right? With the business character. Business character, right? Uh, it is business character mean, so you don't want that much explanation at this moment. And however, short the term duration of the arrangement. Second, past arrangement. Past mean uh, at present you are not engaged in doing business. You have you did that job last year or before that year, but you are getting income this year. It's called past income, past business. You are not doing actually this period, but you have done earlier. Due to that, you are getting income, right? Past. So you have made a sale on last year. This year, you are getting sort of commissions for that business. So that is past. Present, at present, right? Future, prospective employment, prospective. In future, you have planned to do a business, right? So we will discuss in detail. But the business exclude any income from employment, right? Any income from employment. Employment is not a business income. The definition of a business in section 195, subsection 1, specially exclude employment, right? Exclude employment. If you have included any income from employment, that part should not be retake again under the business income. Therefore, if an activity amount to employment, it cannot be a business. Further, if an activity amount to a business, it cannot be an investment, right? So very clearly you should define whether it's business income should be business. Then you can't take into this employment income or investment income. If you take into investment income, you can't take under employment income or business income. This is what incorporated to the law as dominancy principle. Dominancy means so if we are unable to decide whether it's coming under employment or it's coming under business or it's coming under business, we have to see the characteristics and which factor is dominant, more dominant. We have to allocate that income into that category. One is dominant over another. Hence, a person is just passively holding asset. In that case, he has an investment rather than a business, right? Say for example, one person, Mr. X, he is buy and sell land, right? Real estate, land. He's not doing that buying and selling frequently, not frequently, right? He today he purchased a land and he put that land for a period of time, say 5 years or 6 years or 3 years. After that period, they can sell the land and get profit. Is that business or investment? Is that business or investment? Confusion, no? It's not a take, not frequently, right? It's not take, not frequently. Say that person buy and sell the item within a 12 month, 2, 3, 5 times he do this kind of things, buy and sell, buy and sell, buy the land and sell. So if the person doing regularly in that year, we call as a business. But if that person doing this kind of thing after 2 years or 5 years, 6 years, so we can't treat as investment. So we can't treat it as a business. Rather, we have to take it as a investment, right? Right. Accordingly, it is very important to understand what constitutes a business. As per the above definition, business includes trade, profession, or vocation. However, there are no definition given for trade, profession, or vocation. There is no exact definition in the Act. Therefore, it must be understood according to their general meaning, right? General meaning. The combined effect of this term is that any person actively engaged in deriving money from the provision of their labor or service will be engaged in a business if they are not an employee. A person is not regularly doing business, not an employee. The trait. In order to decide whether there is any trade or not, we must see that one, whether a person has purchased some commercial quantities of items which are more than enough for him, right? So as normally we know the limit for our personal use. Say you are using soap for bathing, so normally you can consume for a week one soap, right? For month four soaps for a person. But if you are purchased 100 soaps per week, it may be, right, it may be for commercial purpose, not for your personal use, right? It is more than enough for your personal use. If such articles are held for a short period, you just purchase and keep very short period of time and you sell it, right? It's the indication of trade. Transactions are repetitive, continue frequently. It is happening frequently, right? And anything has been done, anything has done to have a saleable items, right? Buying saleable items, inventory. Any such motivation to make profit. You are buying something, you are not still sell it, but you have an intention to make profit by purchasing this item. If so, it can be determined that there is a trade. Now we discuss about profession and vocation. Any person engaged in professional activity, right? Any person engaged in professional activity with his special skills and knowledge, right? The important thing here, special skills and knowledge. It is his profession. He may have obtained such a skill from institution following a course or program. For example, a chartered accountant engaged in accounting practice, right? Vocation. Vocation is an occupation to which a person is specially drawn or for which she or he is suited, trained, or qualified. Most probably out of his born skills. For example, singer, actor, like that. What constitute a business? What constitute a business? Service fee is a business income, indication of business. Right. Service fee, consideration received in respect of trading stocks, right? You buy some items, inventories, and sell it. Say, for example, retail shop, you purchase some inventories and you sell it back to other customers. So it's called trading of stock. Service fee mean, uh, say, doctor is getting service fees, and barber shop, they're getting service fee. Lawyer, they're getting service fee. Gain from realization of capital assets and liabilities for the business. Capital assets, the assets can be used for long period of time, long term. Amount calculated from realization of depreciable assets of business. Depreciable assets, say machineries, plant, equipment, that sort of things. Consideration for accepting a restriction of a business capacity. Right? Consideration for accepting a restriction of a business capacity, and gift received in respect of business, amount derived that are effectively connected with the business and that would otherwise be included in calculating the person's income from an investment. Other amount required to be included under the act, right? Restriction, future business restriction. What do you mean by consideration for accepting restriction on a business capacity? Right? We will. Business income. Right. Restriction. Say you are running a restaurant in your area, say Colombo area, right? You are running restaurant business in Colombo area. You are very famous, and you are planning to move. You are going to open a branch in Kandy, right? You are going to open a branch in Kandy, and another persons are running restaurant business in Kandy. That person fear that if you open a restaurant in Kandy, his business will be damaged. Right? His business will be damaged. Therefore, the person in Kandy contact you and request you don't open a branch in Kandy. You do your business in other areas, but don't come to the Kandy. If you come here, I will lose my business. And for that, uh, you are accepting him a certain amount, say 5 million, right? You are getting 5 million to not to do the business. For what? You are getting 5 million for not to open a business in Kandy. So that is you are getting you are accepting a restriction of the business capacity. So this 5 million also considered as a business income. Any gift, if you are getting any gift from other people for your business, that also should be treated as a income. And it's exclude exempt amount and final withholding tax payment. Exempt amount and final withholding payment, and the amount included in calculating person's employment income. If any income include considered under the employment income, we cannot consider that. Right? And consideration for accepting a restriction of business capacity is a new concept incorporated to the Act. For example, sometimes a person may receive some amount for agreeing not to do a business, as I told you in example. Gift received in cash or in kind, similar to cash, in respect of business is also a new concept as above. So gift is also a new concept in the Sri Lankan law. When a gift is received, it should be considered as a part of its business income. However, if the gift is in kind of a trading stock, a depreciable asset or a business asset, then it will have a cost equal to the amount included in the income as per the provision. So we have to take the gift as its cost, market value. Any income that a person might derive from an asset without active engagement, it is considered as investment income. However, if an amount is derived in context of a business which has an effective connection with the business, it is treated as business income irrespective of whether it is mentioned in section 7, which explains as the investment income. So this section is about whether we have to consider that income as a business income or uh, investment income. So section 7. So therefore we have to consider whether that income is effectively connected with that business. If it is effectively connected with business, we have to treat as business income. Otherwise, we have to treat as investment income. Right. Computation of gains and profits from business. In order to arrive at the assessable income from business, all expenses incurred in production of income. So we can consider all the income, all the expenses to produce production of income is allowed. Income are allowed as deductions, including certain specific expenditures, but prohibiting deductions of certain other specified income expenditure mentioned in the incentive. So the main area you have to understand in the business income, there are two types of income, right? There are two types of expenditures in business in calculating business income. One is allowable expenditure, other one is not allowable expenditure. Say I will do an example for your understanding. Right. Say company X, YZ company, XYZ company, right? Their net profit sales 100,000, and the cost of sale is 50,000, right? And gross profit equal this value minus, right? And this is a profit, and admin expense 2,000, and selling expense 3,000, and donation 10,000, right? And bad debt 15,000. Then how much net profit? Net profit how much? Net profit 5,000 minus 2,000 minus 3,000 minus 10,000 minus 15,000 equal how much? 20,000, right? So you have to pay tax at 35%. Tax at 35%. Right? Tax equal no, 35%. So income tax is 7,000, right? So does this calculation is correct or not? According to the LKS accounting standards. whether the calculation is correct or not according to the accounting standard. It's correct. According to the case, the amount is correct, right? But for the tax purpose, right? Tax purpose. This is for accounting purpose. Accounting purpose. Right? This net profit is called as accounting profit. Right? This is called as accounting profit. Accounting profit. Right? This 20,000 is accounting profit. But tax purpose mean tax profit mean taxable profit. We have to calculate taxable profit. We arrive this 20,000 income, right? We by following accounting standard. We have to find the taxable profit based on the Inland Revenue Act, right? This amount will be this profit, say, right? Right? According to the provisions of Inland Revenue Act, the donation is not deductible expenditure. Bad debt is not deductible expenditure, right? Then how much profit? Admin expenses is deductible expenditure. Selling and admission expenditure is a deductible expenditure. Then how much taxable profit? Now 5,000 minus 50,000 minus 2,000 minus 3,000. Then 45,000. And tax will be into here. People are try to reduce the income tax. Therefore, they will deduct many things, donations, bad debt. They will show as a expenditure, and the profit will be go down. Therefore, the income tax also will go down. So, government wanted to collect more tax from the people. Therefore, the government is restrict some expenditure, say donation. This donation is not contributed to making profit, business profit. This bad debt. This bad debt also not contributed to making profit. So therefore, the government is not allowed to deduct this kind of expenditure. This is called what? This is accounting profit, right? So this 45,000 is a taxable profit. So there's a huge difference between, right? Take this row. Right? This is tax accounting profit. This profit is calculated based on uh, but by accounting rules. Here we have calculated taxable profit 45,000 by following the provisions in the Act. Right? Any questions? Any questions? Okay. Computation of gain and profit from business. In order to arrive the assessable income from business, all expenses incurred in the production of income are allowed. Yeah, we are allowed. These expenditures are allowed. Admin expenditure and selling expenditures are allowed to calculate profit, including certain specific expenditure. But prohibiting it's not allowing, right? Prohibiting the reductions are of certain other specific expenditures mentioned in the Revenue Act. So therefore, one must adjust the book profit or accounting profit. So this amount is a book profit or accounting profit. Uh, Therefore, one must adjust the book profit or accounting profit to fit into the provisions of the Act to arrive at the assessable income of tax purposes. Accordingly, assessable income is computed as follows. First, we have to take net profit as the accounting profit, and we have to deduct exempt income, final withholding tax, or other amounts, and we have to add disallowable expenditure. We have to make it plus and add disallowable expenditure. In this example, donation and bad debts are not allowable expenditure, and the allowable expenditures we have to deduct, and we will take business income. One person asked question, bad debt, why not affect in taxable profit? So bad debt only trade bad debt only considered as a deductible expenditure. Sometimes a company may give a loan to the employees, right? The company unable to recover that loan from the employees. That time we will consider as a bad debt, right? So trade bad debts are allowable expenditures. Here, we have to adjust this profit. So we have to uh, arrive taxable profit from accounting profit. In this example, how much accounting profit? Accounting profit equal 20,000. Right? We have to adjust this profit to arrive taxable profit. To arrive taxable profit. So we have to make some adjustments. If there are any disallowable expenditure, we have to make it plus, add, right? So in this example, donations and bad debts are not allowable expenditure. So therefore, we have to arrive this 20,000, they already deducted. But according to the provisions of Inland Revenue Act, these expenditures are not allowable. So therefore, if there are any disallowed expenditure, we have to add here plus what is that? Donation. Donation. How much? Donation equal 10,000. You have to add, and bad debt. You put doubtful debts, right? Some people are confused. Doubtful debt or debt employees, employer. Right? Bad debt, employee loan, right? So how much? 15,000. Now, how much taxable profit? 20,000 plus 10,000 plus 15,000. See, both are equal. From accounting profit, we reach taxable profit by adjusting allowable expenditure and not allowable expenditure. Any questions? Any questions? Right. Here, net profit is an accounting profit, and we have to add reservable expenditures and less allowable expenditure. Then we will get so income from business. So, Right, we will discuss about disallowable and allowable expenditure. Some people ask question if donation made to approved charity or government. No, we can't include any donation under business income. Right? Disallowable expenditure and allowable expenditure. All expenses to the extent they are incurred during the year in production of income. The production of income is important. If any expenditure is incurred for the purpose of making profit, no doubt that is profitable, allowable expenditure. We can deduct from income, right? All expenses to the extent they are incurred during the year, right? The expenditure should be incurred during the period. The production of income from the business or investment is allowable to deduct. Allowable to deduct when ascertaining the income from business and investment. Section 11 of this Inland Revenue Act, right? However, as per the Section 10 of the Act, certain expenses are to be disallowed. Right? Some expenditures are disallowed. As I told you in the example, this donation and the paid dates to employees are not allowable expenditures because these two expenditures are not contributed to making profit. Right? They are not involving in making profit. Therefore, we can't include as an allowable expenditure. So we have to make adjustment for disallowable expenditure. Certain other sections, that is section 12, 13, 14, 15, 16, 17, 18, and 19, specifically allows certain expenses. No deduction is allowed for expenses of capital nature. Capital nature means, say you are purchasing a machine. The machine can be used for 5 years, 10 years, so long period of time. Capital expenditure, capital nature, right? The expense of capital nature includes an expense that secures a benefit capable of lasting longer than 12 months. If any expenditure, if any assets, if any expenditure you made, from that expenditure you can get benefit for more than 12 months, that expenditure is called as capital nature. If you are taking your personal life, uh, buying lunch parcel and home rent, room rent, telephone charges, all these kind of expenditures are uh, your revenue expenditure. The purchase of mobile phone, purchase of laptop, purchasing house, right? So these expenditures are capital nature. You will get benefit for more than 12 months. Okay? Now we will discuss about a disallowable expenditure. Right? There are two types of expenditure, but one allowable expenditure and disallowable expenditure. In calculating income for any source, right? In calculating income from any source, the followings are not allowed under the section 10. Domestic expenses. Domestic expenses mean personal expenditure or home expenditure, right? And the details given in section 197. Tax payable under this act. Under this act mean Inland Revenue Act, right? Inland Revenue Act mean number 24 of 2017 in Inland Revenue Act. The tax payable under this act and taxes other levies specified by the Commissioner General of Inland Revenue in the Gazette Notification 2064-54 dated on this date. Right. So simply, any tax payable are not deductible expenditures. Interest, penalties, fines, right, payable to the government or called subdivision of a government for breach of any written law. Right? If you are not obey in any rule, you will be fined by the government or by the court. So that amount, penalties, fines are not allowable expenditure. These are disallowable expenditure. Expenditure incurred in deriving exempt or WHT amount, final WHT amount, also not deductible. Retirement contributions. Retirement contribution by the employer. If the benefit is taxing on the employee or contributed to the fund approved by the CJIR, such contributions are allowed. Normally, retirement contributions are not allowed, but if it is allowed by approved by the CJIR, it will be allowable expenditure. Dividend, if company pays any dividend, so dividend is not an expenditure. Entertainment expenditure, right, or outlay, right? In your company, in your business, there will be a party, nightclub party, a dance or TJ. For that, if you made any expenditures, that expenditures are not considered as an business expenditure, disallowable expenditures. And entertainment, to make fun, not for the purpose of making profit. Rather, you are spending that amount of money to get some fun, to make some fun. And the reserves and provisions. Reserves, say general reserve and general reserve and depreciation reserves, right? And especially other special reserves. No any reserves are considered as a allowable expenditure. Expenses incurred on lotteries, betting, and gambling, right? Expenses are incurred on lotteries, betting, and gambling, unless the cost of conducting such business. Right.